I know you were saying that the difference between a 6% and a 5.5% loan is more than a couple $100 a month, which is massive. Hello and welcome everybody to the Housing Tips. It's the show where we talk about housing tips, housing news, and everything in between. I'm your host, Eric, and once again, joining me as my co-host, Jesse. How are you today, Jesse?
Doing good, brother. How you doing?
Doing well, can't complain. I know that I always talk about the weather, but we could talk about something else. The Dodgers are going to be playing in the
Ooh.
playoffs coming in a few days against their rivals, San Diego Padres. Who do you got to win the series?
Go Dodgers, go LA. Sorry, all my family from San Diego is probably watching. Dodgers gonna take it.
Yeah, I mean, I'm a huge Otani fan, so anything can happen in the postseason. But I also agree. Hopefully, the Dodgers take it as well. But speaking of Los Angeles, that is exactly why I brought it up today. It's actually a very interesting article that we wanted to talk about today. That's coming from the LA Times, and I'll go ahead and share it on the screen and also talk about it for our listeners. Is will interest rate decline shake up California housing market? So this is something that we just spoke about in a previous video, but since the federal bank actually dropped interest rates by half a percentage point, this article was written, and of course, we'll put the article in the description below so you can check out the full article. But the LA Times writer is saying, hey, they're projecting by 2025, maybe next year, maybe even sooner, that home interest rate loans could be in the 5.5 percentage points instead of right now they're in the sixes or sevens. What are your thoughts about that, Jesse, and about the article?
I mean, mortgage rates being in the mid 5% range. Like, what would you think that would do, or like, how do you feel about mortgage rates being in the five percent range?
Oh yeah, as someone, and this is something that as a consumer, something I didn't know is that what the federal interest rate is isn't the rate that you're going to purchase your house at. And
Mhm.
so, even though I hear this buzz about, oh, the loans are at 5.5%, the federal bank interest rate, the funds rate is at 5.5. That's not exactly the type of home loan you'll get, but it's a cause and effect. And then over time, the home loans will become cheaper as interest rates keep going lower and lower by the federal bank. But as someone as a consumer side, when I hear that, those are buzzwords for me. Those are, hey, maybe it's time to start looking, maybe it's time to see if there's like options available because at a moment's notice, they could start dropping the rates even more and then it makes the home more affordable. As we talked about in a previous video, I know you were saying that the difference between a 6% and a 5.5% loan is more than a couple $100 a month, which is massive for anyone looking to buy a property. So that's what I hear. But what are your thoughts, Jesse?
No, yeah. As I was reading the article, what popped up for me was just still the buyer hesitation. Like, despite the rate drops, like many buyers are holding back, and I wonder if it's just the recent rule changes, right, and real estate commissions. The market uncertainty might be kind of deterring, that action. Also, with like the election right now, so waiting could mean missing out on like favorable prices. Like, once buyers are ready, I feel like that's going to definitely increase buyer demand. That can possibly drive prices higher. And just to remind people that real estate is a long-term investment, and getting in now can secure equity growth over time. I feel that right now is like a great time, and people are still kind of waiting, right, for that shift, and then the masses are going to come out, and now everyone's going to be talking. It's a great time to buy, and now everyone's going to be coming out, and everyone's going to be looking at the properties. You're going to have more competition. I keep looking at properties taking more time to sell. And what does that mean? You being able to negotiate, you being able to get assistance with closing costs, with your down payment, with the seller helping out with repairs. And the other piece of real estate being a long-term investment. It's been stable. It's been a long-term investment. It can help you build over time, even in the fluctuating markets. Even if the market like '05, '09, like over decades, California properties, they have historically appreciated in value. They outpaced inflation. And so that helps maintain, your equity. And you can look at almost all the properties, seeing at what prices they sold from the 90s to 2000, 2010 to now, and just seeing how that just gradually has increased over time.
Yo, and I definitely agree 100%. I feel that that's extremely important and something that I always hear, and this is something that I always like to tell people, it's not about timing the market, it's about time in the market. And that's
Right.
vastly more important, like exactly like you said, Jesse, where you're saying how it's not about picking the perfect time. It's about seeing if the numbers can work, especially in California, especially in the big cities. Hey, it's almost if it could work on your budget, it's better than renting. Renting is a great option. It's fantastic for a lot of people, but if you really are looking to invest and protect yourself from inflation, protect yourself from different changes of the market, then purchasing and holding and time not timing the market, but time in the market could be something that's massive.
No, yeah, the your time in the market, and like you can look at evidence from family and friends, and like I was joking with my grandma. I was like, "Grandma, how much did you pay for your property?" Right? And she was just like, "Oh, like this amount." I understand it was probably harder for them to qualify, especially on the wages, but you know, now it's like, "Oh, like this is how much your property is worth." Right? And she has a lot of flexibility and things to kind of do now. Maybe at the beginning you can't, right? But if you foresee, okay, in 10, 15, 20, 30 years, just that investment and what it can really do for me, for my family, and for future generations.
No, definitely. And I know that is something that a lot of people see as being just vastly important is the ability to have generational wealth. And when families have homes and families can continuously build and build and build and build and through properties, that's a very not a simple way, but it is a method to achieve generational wealth is just having the ability to purchase a home and just having your home in the market. You never know, especially, look at something like Tesla. They moved their factory from Fairmont into Austin, Texas, and now tons of homes are rising in price because they know, hey, big tech companies are opening here. So now Austin, Texas is the tech hub. And you never know. Maybe one day a place in like Utah could have the middle of nowhere. And then Elon Musk says, hey, you know what? I want to move the whole company to Idaho or Utah. And overnight, your home could vastly increase in value because of that.
Yeah, and the last part of just, taking that, plan and getting into a property, it provides stability and security, right? A stable living situation. You reduce the risk of that the rental market after, your lease, rent's gonna go up. And so that stability can lead to like long-term financial planning and investment, and legacy planning. Like real estate assets can be passed down to your heirs, providing them with a financial foundation that can enhance their financial stability and opportunities. And so I think it's huge. Real estate is a tangible asset. You can, a lot of investment opportunities, community and social impact, just leveraging those family resources and just so many ways of how it can help tax benefits, passive income generation. So I just, encourage everyone to really, think about how, they can kind of get into the market as well.
No, and I 100% agree. I know I say it every single video, have to come up with a new slogan. But as always, Jesse, I think that is fantastic information. And if there's anything that this video finds of interest to you, please consider liking and subscribing to this video. But of course, thank you so much for your time, Jesse. And everyone that's watching, have a great day.